Welcome back, traders and investors. We have Eddy Elfenbein here, editor of Crossing Wall Street. According to CNN Money, he has beaten the S&P 500 for the last 7 years in a row. How's it going in this eighth year, Eddy?
Actually, we're slightly behind so far, right about the mid-year market, but I'm always optimistic. I hope we'll catch up. We're trailing by about 2%. So
2%.
it's not so bad. At least the overall portfolio is in the black for the year.
Okay, so where do you think you're kind of missing the overall market? Are you kind of sitting on the sidelines of some of the momentum stocks? Not enough money in the energy sector, or where do you think you're trailing the broad market?
Actually, that's the energy sector. Probably is one of the areas not having stocks in any energy stocks has probably hurt us this year. And especially lately, the energy sector has been doing pretty well with the news coming out of Iraq, and that may continue. We've also had it's been a rather unusual year that we've had a major sector rotation from a lot of the high momentum stocks did very, very well, and then did very, very poorly, and then a lot of value-oriented stocks dramatically outperform the market. And we've seen that sort of phenomenon happen in the small cap sector, in a lot of tech stocks, and a lot of the NASDAQ. It's that same sort of lurch forward and then dramatic pullback, and now there's some stabilization of that. So even though the overall market has been pretty placid, just underneath the surface, there seems to be a lot of turmoil going on.
So what's kept you out of the energy sector?
To tell you the truth, it's nothing more that I just don't feel I have an expertise on a lot of those names. It's not any broad macro call. Just I feel I like to stay where I think I understand the companies and I understand the dynamic that drives them. So, and energy has always been, for me, a bit of a black box. So I stay away from this, and I think it's something to my own detriment. But I like to stay where I think I have some knowledge and some expertise.
And where are those areas?
I think a lot of just more of your bread and butter companies, a lot of retail stocks, and just consumer staples. I think are areas where I think I have a better understanding of the dynamics that drive the business.
Okay, well, when it comes to retail stocks, you got to be extremely careful here because it seems like things are either really good or really bad. Can you touch on some of the retail stocks that you're in and perhaps are working for you?
Sure. Well, one that I like a lot, but that has not done well at all, is Bed Bath and Beyond, and they had some. They had to pare back some of their guidance this year. The stock has suffered pretty severely. It's down to about $60. It's right near a 52-week low. I like this company a lot. I think it's very, very well run. It's a highly efficient company, and it has a rock-solid balance sheet. A lot of people think that it's sort of a play on the housing market, and that's true to an extent, but I think it's easy to overstate that. I think it's just a very, very well-run company, and I think in the long run, I think the current price here is a very, very good bargain. Another retail stock I like a lot is Ross Store, sort of on the deep discount end. That also got hurt with some retailers earlier this year. I think this is a very good price. I think it's going to be much higher in 2 years from now.
Okay, and what about you doing anything in J.C. Penney?
No, I'm staying away from that. That's one of those things. It could be a big turnaround. It could be a big success, but I just don't know. In a situation like that, there's too many moving parts. The thing about turnaround stories is they're usually much more difficult than people realize. They do happen, and you can get a big move from them, but it involves sort of a very, very detailed knowledge that is hard to sort of piece together the larger picture. And then even if you get it right, there's nailing the stock right. So I'm always very hesitant of turnaround stories. Some people can do them well, and also to really turn around a company. I think it's much harder than people realize. That once you fall behind, all of those things turn against you, and they usually amplify. So I'm not. I wish J.C. Penney well, but I'm staying away from
But you're
it.
staying out of the stores. So when you are looking at what retail stocks to invest in, but they give out a lot of information, same store sales and whatnot. What do you pay attention to? Just earnings projections, how they come in with earnings, expansion. What do you look at when you're analyzing retail stocks?
Yeah, I mean, I try to look at everything, and I don't follow one thing. The sort of the golden metric for retail companies is the same store sales. I also like to listen to what they have for their projections, and I place a lot of weight on a company that offers guidance. I think that's some companies don't do that, and some companies do a very good job of that. And to me, that's a good tell of a company that is sort of more dedicated to its shareholders. And it doesn't matter if they're always right. I just want to see that even a company is a good example. You'll hear a lot of times a company will reiterate its full year guidance. A lot of people sort of I think they tend to ignore that. I like hearing that. I like hearing companies saying that, yep, we're still on for the full year. It says something that they are willing to tell shareholders and general public how things are going, and that's a good story where people. A lot of times, I think a lot of investors don't see that as an important news story. Of course, you also want to look at things like inventory level, previous earnings, the balance sheet, and their expansion plan. So I try to take in the larger picture of what's going on, and I just look for solid companies going for a good price.
If you don't like a stock and you don't like the fundamentals or the earnings guides and stuff, or do you put any shorts in your portfolio?
I don't do that, and there's again, it's the problem is sort of it's hitting it right on the nose. I'm not a very good market timer, and I have a lot of respect for people who play that game, but it's something I do not do well. So I prefer to stay long because I think that's when you don't when you aren't a technical guy, you don't have a good understanding of the charts. The long-term trend, I think, is in your favor, and basically my strategy is using time and patience, and have those generally work to my favor.
So you don't use any technicals?
I do not now.
Okay. You talked about you also like the consumer staple market. Can you talk about a few of the issues that you're in, or better yet, looking to get in?
Let me see. Well, I think it's an interesting situation right now because we're really looking where the consumer is in the economy, and I think we're at a point where we're seeing some more strength in coming from the consumer. I think that will get stronger this year. A few names I like, and these are exactly cyclicals, but I'm a big fan of Ford Motor, and I think that's going for a good price. And I think they're making a lot of good moves. And I think it's going to get better for them going forward this year. Also a fan of McDonald's. It's been a good yield. I like eBay. There's a stock with a strong cyclical component. That's pulled back. Now, these aren't technically staples, but strongly related to that is the medical healthcare sector. And one stock that's on my buy list that's making a lot of news this morning is Medtronic. And they did a very big deal this weekend, or they announced the deal with Nvidia, that they're going to have an inverse merger. So Medtronic will adopt the headquarters of Covidien, which is in Ireland, to get a big tax break. So I'm keeping an eye on Medtronic this morning. It looks like it's around
I want to go into
$66.
that a little bit. Just, I mean, here's a
Sure.
stock that just doesn't move. I mean, it moves. It's been moving up nicely here. A lot of times when you do get an acquisition, a lot of times the acquirer goes down. They had this stock trading up over $68, and now it's come in quite a bit. I mean, you weren't in Covidien before, I assume. Now you have this merger going on. I mean, this is a pretty big windfall, for the stock. Are you just looking for? Are you gonna go with the whole merger thing, or is this something where, hey, Medtronic's with my stock. This is a big pop. I'm out, putting my money somewhere else.
Mhm. Well, with my buy list, what I do is I select 20 stocks at the beginning of the year, and then I do something very difficult. It's locked and sealed for the entire year. I don't make one single change for the entire year. Then at the end of the year, I just add and replace only 5 stocks, so the 1/4 of the portfolio. So Medtronic is on the buy list, and I'm tied to it for the rest of this year. It is interesting that the acquirer is up. Now, they have roughly equal positions in this merger. Medtronic is larger, and Covidien is getting a much bigger pop this morning. It's an odd dynamic right now because a lot of people see mergers as going on in this space as they're trying to adapt to the healthcare reform, the Affordable Care Act. So this isn't totally out of the blue, and I think what the market is most responding to is the tax advantages that Medtronic will get out of this deal. So I know there was greater optimism in the pre-market, but still, this is pretty unusual that it's getting a nice pop being the buyer on this deal.
It was getting a nice pop. It traded over $68 on the initial news. Actually traded up to 68.40. We are back down at 62.70 now, and this thing almost looks like it wants to go down to that 62. 61.93 was Friday's high. So you hold your positions for the whole year. You pick them,
That's right.
You must be really busy in December. It must be no holiday vacations for you if you're doing that. But so you're not tempted during the year to take profits or stop yourself
Oh, I'm
out, or
absolutely tempted.
okay.
Temptation is always there, but I don't do it. I hold on to the stocks, and a lot of times, probably when I wanted to dump something, get out of a position, the rules of the buy list have probably usually served me well.
Okay, so were you doing this as he says that you beat the S&P the last 7 years? Have you been doing it longer than 7 years, or when is that when you got started?
I'm in my 9th year, so the first year we lost to it, and it was sort of interesting because a lot of I wouldn't call myself a value investor, but more a lot of the conservative names were not doing well as we were leading up to the last stages of the bull market, and then things just fell apart after that, and since then, so it's been 7 years of beating it. And then right now we're
You're
just
down a
barely.
little bit. Well, Eddie, you've had a pretty favorable overall market with it. It was pretty good timing when you got started and everything. And, everyone's looked like a genius here over the last 3, 4, 5, 6 years. Do you think it's symptomatic of the market? You think this run can continue? Or do you think that, you might have to adjust your strategies over the next few years?
Mm-hmm. That's a good question. The short answer is I don't know exactly what will happen, but I always just my strategy is sort of to look at the math of the situation and try to bend things in my favor. I think the fundamentals of the market, giving the bond yields, giving the sort of tepid growth of the economy, I think the math is very much in the favor of stocks and to being long. I particularly think staying away from a lot of the high value names and sticking close with what are the high quality and where you can find lower price names. That's not as easy as it was 2, 3, 4 years ago, but I still think that those are the best areas. One of the things I'm keeping an eye on is the spread between the 2 year and 10 year. I don't overemphasize this, but I think that's a good sort of early warning system of where the economy is going to be. And I think as long as the Fed meets this week, as long as they are sort of committed to helping the economy, I think investors really need to be in stocks. I think the Fed is taking a large risk away from stock investors. So I really don't see any problems for stock investors for at least the next year.
Okay. And the stocks that pay dividends is a couple of the ones that you talked about. That's like McDonald's and some of the consumer staples. You're getting a little bit of return there, even if the stock goes nowhere.
That's right. That's right. I also like to look for stocks that have like long histories of increasing their dividends. Again, it's just something you like to see that a company is committed to their shareholders and likes to increase that payout each year.
Okay, all right. So, any final advice for investors? I mean, I see pretty much look for the market to toe the course, and definitely that has been the trend. The trend is your friend. You're looking at like cues from the Fed. Is there anything else that people should keep an eye on here that might turn this bull market around?
Well, I guess I'm really keeping an eye on some of the tensions going on in Eastern Europe, in Russia and Ukraine, and even there was some shutting off of gas. And there's another dispute. This has happened many times before. And also, I'm keeping an eye on the situation in Iraq. Not a geopolitical strategist, but obviously, if the oil market that basically acts as a tax, a very regressive tax on American consumers. If the price of oil goes up, and that can really take a wrench to consumer spending. I don't think it's a huge risk now, but it's something I'm keeping an eye on. I think it could trip up the stock market.
Okay, we've had Eddy Elfenbein on here. He is the editor of Crossing Wall Street, giving us his experience look at the market, stocks that he likes to look at, consumer staples, some of the retail stocks. Eddy, thanks a lot for coming on. We love your commentary. Hope to have you back again.
Great, thanks.